Hello, everyone. Darren and Leviathan here. Remoting again, but generally on the trading floor of the CME short interest rate options. So, your morning report. You are probably already aware we had non-farm payrolls this morning that came in stronger than expected. 88,000, 80,000 odd was expected in the survey and came in at 172,000. So a lot better than expected there, showing the continued resilience of the US labour market. Average hourly earnings came in as expected at 0.3, as did the unemployment rate at 4.3%, as did the labour force participation rate at 61.8%. So, how has that affected the markets? Well, at the end of the day, I still think the focus is on the geopolitical events coming out of Iran. However, you'll see the stock market's going to come in a little softer this morning, kind of back to where it was yesterday morning, as Broadcom gets dragged down further. Although it's kind of like back down to where it was yesterday morning after the numbers came out. It opened a lot lower, rallied up, settled quite happily, and is now back down to where it was before. So could expect continued weakness there. I just want to go and show you the trade that we were looking at for the downside, targeting around 369. At this ratio fly, we come in, I know on the ratios, if it's not on the vanilla tab, it comes in as a 1x3 by 2.5. So you have to double the size and half the volume for your $1,000 worth of investment to get this kind of return. So this would be a 2x6 by 5. We got you in around the dollar mark, if I recall, and we're going to see it's not really hugely different. We got you in around 82 cents. It's just over $1 now, as to where it was yesterday morning. Still not too bad. Short-term interest rates, so ticking lower again once more. Interestingly, though, and this is where we'll go back to this, we had a couple of trades that we liked. This one specifically, I liked, and we'll go over a couple more that we suggested yesterday. The downside plays targeting potentially more than one hike. What you'll see, and why I find this very interesting, is that now we have a 20% chance of more than one hike by the end of the year. We are starting to believe. And so this one here, which is the 780 put fly in December, if you can get this around 1.25 ticks, it's a buy. I liked it at under a tick, I liked it at a tick, and I like it at 1.25 ticks even. See where you can get that. If you like this, if you like the downside play, I really love this trade. So for the implication of more than one hike, the December SOFR 57, 58, 60 put fly at a tick or a tick and a quarter is a good buy as far as I am concerned. Later on, we'll have a look at a couple of other alternative trades that will be one hike, 1.5 hikes, and 2 hikes. They're not going to be too much difference, but this is the one that I've put on, suggested at the beginning of the week. It's gone up a little bit already, but I still like the trade. So there's that one there. let's see now, as far as other news goes. Please. Um, sorry, bear with me 1 second. Just having a look at across the board. Basically, it basically talk about the Fed being able to watch inflation. So that some people saying whether or not they should or should not hike, but inflation is going to be the thing going forward. And the other part is that, and I think this is going to have a bearing on the markets. Well, obviously, it's going to have a bearing, but we are coming towards the end of our inventories in crude oil. Uh, it's even if there's a peace deal, depending on what's in the peace deal, you need to watch that because you could still end up with oil remaining higher for longer, which will have knock-on effects throughout everything else. Uh, so I did have a look at a couple of upside trades in crude. I can go over those later as well. At the end of the day, that was just like buying calls. If that was the way you're inclined, like a 120 target is basically saying I'll just buy these 105 calls. It like those quite a lot for December expiration. The other thing of note as you come in, Tesla's been upgraded at JP Morgan. They're targeting the 475 to 500 range now by the end of the year. I did have a quick look at that. Got to be honest, it wasn't anything like too grabby. But you're looking on the plain vanilla. This is not a bad trade, but it's quite expensive, and even our system gives it a 65% like likelihood of winning, which is better than 50. But it's I need to have a look more. There's some good ratio trades to put on, but these have a little bit more risk. Although I quite like this one, it's relatively cheap at $4.27. It's a ratio called Condor. So you'd have to look at the common denominator on that to figure out how to execute that trade and then divide the volume by the same amount. But looking at the heat map, there is that risk here. Right? If it carries on motoring up for expiration. So, this does have this red area here. But if you are convinced that that's going to be where it ends up and it's not going to exceed that by a lot, there's a huge return you can make for around the 500 mark if that's where we end up at the end of the year. You just have to be wary about what it would look like on expiration if you were to go to around the 560 area. That is where your risk is. And you can see how, and this is the other point I wanted to bring out. Option strategies are very fluid. They will act for you during the course of its cycle differently across time and price. As you can see here, a move up quickly, you do very well. A move up in like 100 days, and you won't do so well. But then coming towards expiration, if you can nail the 500 area, then you're going to do remarkably well as well, but with a risk in the top right hand corner there. So that is what we look at when we do these trade ideas for you, is we're looking at the whole span of what your potential risk and reward on these trades are. So Tesla upside for 500 is, there's a couple of trades, but they don't come without risk. So the one that I did like out of all the trades we were looking at was that SOFA downside play. I still don't think that it's fully priced in. People are still convinced that we might cut, which may still be the case. However, the futures at least are not agreeing. But yeah, with the strength in the and the resilience of the employment market, I would say that the risk is definitely tilted to the upside in rates, downside for the futures. And interesting to note, the 10-year as well is backed up to 4.5%. So watch that. That's basically a big catalyst. 4.5, you could see us charging back up to the 4.625 area again. And this will also have a knock-on effect on everything else. Other than that, we just had a announcement saying Iranian forces did not fire warning missiles towards the US Navy warships, as doing so would be a gross violation of the ceasefire. Which, yeah, whatever. Anyway, as I've said, always and every day, better be lucky than be good. And so, best of luck to you all, and have a great day trading.